In this video, I'm going to cover one of the more confusing things about getting a mortgage, which is an escrow account. And a lot of people don't understand how it works. So I'm going to explain how an escrow account works and if it's something that you should have when you do get a mortgage. So first, we need to understand what goes into your mortgage payment. It's not just this lump sum that goes to the lender and it's all interest. It's actually made up of a couple different things. So one of those things is the principal. And principal is you paying back the loan that you got from the lender to buy your home. The interest is what the lender charges for having the loan. So this is often when you see 7% interest rate, you're paying 7% on the principal of the loan or the current outstanding balance of the loan. Now, you also have property taxes, and these are property taxes charged by your county. And then you also have homeowners insurance, or also called hazard insurance. And this is for things like fires and damage, natural disasters, things like that, to help you recover the value of the home if anything does get damaged. Now, if you have a mortgage, you're going to be required to have hazard insurance or homeowners insurance. If you don't have a mortgage, you don't have to get homeowners insurance, although I would highly recommend that you do have it. So escrow is basically like a savings account set up by your lender to make sure that taxes and insurance are always paid. And this is sometimes called impounds, okay? Because what often happens is you have homeowners insurance. This is often paid annually. And then property taxes are often paid semi-annually. So for instance, let's take a look at property taxes. Often property taxes could be, let's use an estimate of $3,000 per year for property taxes. So twice a year, you're going to be having a bill for about $1,500. Now, for a lot of people, $1,500 is a pretty significant chunk of change. And so to just be paying that when the bill comes due isn't always feasible for people, and it can be easy to get behind on your property taxes. So what ends up happening is with most loans, lenders will set up an escrow account. And so paying these lump sums can be tough, right? Imagine having a bill for several $1,000s if your property taxes are high or your homeowner's insurance is high, and not being ready to really take on that bill. It'd be so much easier if you were able to make monthly installments on those bills. And for things like property taxes, you can't set up a monthly payment plan with most counties. And then also for homeowners insurance, you're going to get a significant discount if you pay annually. So what your lender is going to do is they're going to look at your tax and your insurance cost, and they're going to break that into 12 monthly payments that you're going to pay into the escrow account. So this is what it looks like. Your lender is going to tell you a monthly amount that you need to pay in homeowners insurance and property taxes. So you're going to pay your lender monthly for homeowners insurance and taxes into the escrow account. And so each month you're going to contribute to the escrow account and build up that, just kind of like a savings account here. So then what's going to happen is your lender is going to get the bill for your property taxes and your homeowner's insurance, and they'll actually pay that on your behalf here. So instead of the county sending you a property tax bill or your homeowner's insurance agent sending you a bill, they actually will send it directly to your lender. Your lender then is going to use the funds in your escrow account to be able to make that payment. Now, setting up the account is where a lot of people start to get a little bit tripped up. So first of all, there's nothing that you need to do to set up your escrow account. And also, an escrow account is not something that you'll be able to manage necessarily. It's not going to be a bank account. It's an account managed by your lender. So you're not going to be able to pull funds out of it whenever you want to, or put money into it whenever you want to. Also, there's nothing that you need to do. You don't need to go open up a separate checking account. You don't need to open up a savings account for it. Your lender is going to handle all of it for you. It's really going to happen in the background. Most people aren't even aware of how this works in the back end. So they're going to set up this escrow account for you. Now, if we go back here to this example, let's say for property taxes, for instance, around here, property taxes are going to be paid first in January and then in July for those two payments per year. Okay, so let's say I'm buying a home and it's June currently. All right, so I just bought the home. Well, in July, I'm all of a sudden going to get a bill for property taxes. Okay, but I haven't lived in the home for the period of time that the bill was due. I've only lived in the home for a month, and all of a sudden in July, I'm due, or what's due is 6 months of property taxes. So what ends up happening is often you'll get a prorated amount from the seller for the property tax for the time that they lived in the home, and your lender's going to take care of all this for you. But also, you need to have a cushion in your account. Now, with your escrow accounts, it doesn't just contain the monthly amount that you contribute. When the escrow account gets set up, it needs a bit of a cushion. And the reason that cushion needs to exist is because taxes and homeowners insurance can change over time. Your insurance payment may increase as your home value increases. Your property taxes may increase as new levies are passed, or the tax rate in your county goes up, or your home value goes up as well. And so all escrow accounts need a little bit of what's called a cushion. And most of the time, this is 2 months of a cushion. So 2 months of homeowners insurance, 2 months of taxes that are required to be deposited into the escrow account when you close on your home. So when you look at your loan estimate or a quote for your closing costs, you're going to see something that says initial escrow payment at closing. And so that is going to be the cushion that goes into your escrow account. And so what's interesting about this is that it's your money that's going to be used for taxes and insurance. It's not a fee. And often people think that it's a fee that you're paying somewhere off into the ether and you never get it back. It's your money. It just sits in an account separate to pay for your taxes and homeowners insurance. And if you sell your home or refinance your home, any money in the escrow account you do get back. Okay, it's not a fee. Again, it's just sitting in that separate account that the lender is managing for you. And people often get confused by how much insurance they pay. So when you buy a home, for most loans, what's going to happen is you're going to have that cushion. So 2 months of homeowners insurance, 2 months of property taxes. And then most lenders are going to require your homeowners insurance paid 12 months up front. So you have to basically prepay 1 year's worth of homeowners insurance, and then also an additional 2 months in an escrow account. And this can really confuse people because they're saying, why do I have to contribute monthly? I've already paid the first year up front, so I should just be able to relax. Well, keep in mind that you're going to pay your first year up front, okay? And then let's look a year from now. You've paid your first year up front, and then monthly you've been paying 12 payments of estimated homeowners insurance. So at the end of the year, when a new homeowners insurance bill comes, there's going to be a new bill that you're responsible to pay for right then and there. Well, if you didn't have the escrow account, you didn't have the money set aside to be able to pay that. And so that's why you pay the first year up front, and then you continue the monthly savings. That way in year 2, when that bill comes due, that money is already sitting there in the escrow account for you. Now, one little aside about escrow accounts that a lot of people aren't aware of is what's called tax proration. So for instance, around here, the tax bill is due in January and then in July for being paid twice per year. Okay, so let's say I bought a home in June. So I'm living in my home for 1 month, all of a sudden it's July, and then a tax bill is due for the previous 6 months, right? Because it's paid semi-annually, so each tax bill is for 6 months. Well, I've only lived in the home for 1 month, so I'm responsible for paying 6 months of property taxes even though I lived in the home for 1 month. No, what ends up happening when you get your final closing statement to sign on closing on your home, what will end up happening is you'll actually get tax proration from the seller for the time that they lived in the home. So they'll actually give you a credit for 5 months of the property taxes that will be listed on your closing statement, and then you'll be only responsible for paying 1 month. So when that tax bill comes due, effectively you would have paid for the 1 month you lived in the home, and the seller gave you a credit for the 5 months that they lived in the home. And this is all handled by the title company, and it's going to be listed on your closing statement. So there's nothing that you have to do. The seller is not going to send you money for the property tax bill. And what often happens is you're not even going to know. Most people don't even know that that's how that works because, again, the escrow account is set up, and then the lender is going to be managing that property tax bill on your behalf. Now let's go through some pros and cons here. The pros of an escrow account is that you don't have to worry about a big bill. So you don't have to worry about semi-annual bills or annual bills that come up, and you don't have to worry about large expenses that come up. Also, you're going to be able to avoid penalties or fees for any missed payments. So, you'll be able to be confident your homeowner's insurance isn't going to lapse, and then also your property taxes are always going to be paid on time. Also, when you sell or refinance, you get that money back that's in the account. Like I mentioned, it's not a fee. That money is yours if you do sell the home. Whatever money's in the escrow account, you're going to get back. Same thing when you refinance, that money is going to be available for you as well. Also, it's free. There's no upfront fee or no monthly fee to having an escrow account. Now, some cons here is the potential for escrow shortages. So let's say that your lender's been collecting $200 a month in property taxes because they believe your property tax bill is going to be $2,400 per year. So you're paying $200 a month into that. And then let's say at the end of the year, your property tax bill is actually $3,000 because of whatever changed in your county over that year. Well, there's now a shortage, and you're the one responsible for the taxes and paying for that shortage. So that's something to keep in mind. That can be a con of an escrow account, because what ends up happening is if you didn't have the escrow account, you'd still be responsible for the taxes. Either way, they're your taxes that you are required to pay for. It's just that when you have an escrow account, people often tend to think that there's no possibility that they would ever have to pay more than they pay in their monthly escrow amount. Also, one con can be that the cushion amount just kind of sits in there. So for people who are really savvy financially, they may want to have that money set in their own account as maybe helping with an emergency fund, or maybe they invest that money. So that amount just kind of sits in an escrow account, not really doing anything, where you could be putting that money to use somewhere else. Also, you don't get to control the money, which isn't a huge issue. But again, it's not money that's in your account that you get to manage. You have to send that money off monthly, and the lender manages that for you. Also, so you're going to have an escrow account an escrow analysis once per year. And basically, this is just kind of reconciling, looking at, the lender's going to be looking at, okay, we've been collecting $200 a month in property taxes. Okay, well, if the property tax bill came in at $3,000 per year, okay, well, there's a shortage there that you need to contribute. Or the opposite could be true. Maybe you've paid in more than is required, and that's what's called an escrow surplus. And so if you do pay more into the escrow account than is required for the property tax bill and the homeowner's insurance, then legally the lender is required to return that money back to you as an escrow surplus check. On the opposite side, if there's an escrow shortage because your property taxes or homeowner's insurance increased and there wasn't enough in the monthly payments saved up in your escrow account to make those payments, then you're going to have to cover that difference. And this is because of real changes, but the padding in your account has to change along with it. Now, I do want to highlight here, because a lot of people get frustrated when there is an escrow shortage, and they think it's the lender who is ripping them off and charging them a bunch of money for property taxes. No matter if you have an escrow account or not, property taxes that you pay are always going to be the same. Your lender is not charging you a premium for property taxes. Your lender doesn't control property taxes or homeowner's insurance. Those are completely separate from what the lender does. They're just the one collecting the money in the escrow account for you. And so it's possible that the lender may have estimated incorrectly, or maybe there's something that they couldn't see. They couldn't see that your home value was going to increase a ton and your property taxes were going to increase a ton, and you're going to have a higher tax bill. Either way, it's not the lender's fault that your taxes increase. It's not the lender's fault that your homeowner's insurance increases, but often the lender is the one who gets blamed because they're the one who's delivering the news and collecting that money in an escrow account. So if your payment does go up, it's not because of your lender. If you have a fixed rate loan, your principal and interest is always the same and never going to change. The only things that can change are things that the lender doesn't control. So for most people, an escrow account is going to be required. What you can do in some situations is actually have an escrow waiver, where you basically say to the lender, hey, actually, I will manage taxes and insurance on my own. And so the lender won't collect any monthly payment from you for taxes and insurance, and then you'll just pay those bills on your own. Now, waiving your escrow account can come with a slightly higher rate, and this is because it makes your loan more risky. Because if you don't pay property taxes, then the county can actually foreclose on your home and get that money first before the lender gets repaid for their loan. Or let's say that you don't pay homeowner's insurance and your house burns down. Well, there's no money to pay back the lender. And if you do actually not pay homeowner's insurance when you still have a mortgage, your lender will actually force place homeowner's insurance that is pretty significantly expensive that they will require on your home. So to waive it, it's really mainly for conventional loans. If you have 20% as a down payment or higher, you can waive the escrow account if you want to. There are some programs that allow you to waive the escrow account with as little as 5% down. Also on conventional loans, let's say you bought the home with 5% down. As you build equity, when you get up to 20% equity, you can actually ask the lender to remove your escrow account at that point in time. On FHA loans and VA loans, escrow accounts are always going to be required. And then on VA loans, no matter the down payment, it is allowed that you can waive your escrow account, but not all lenders will allow this. So just something to keep in mind here. So ultimately, escrow waivers are for people who have financial discipline and budget well for big lump sum payments and are comfortable with that. Also, there are people who are fine giving up the convenience of an escrow account where you really just don't have to think about it. You can set your mortgage payment up on auto pay, and you know that your homeowner's insurance and taxes are always going to be paid and you never have to worry about it. It's also for people who are comfortable with the responsibility of paying your property tax bill and your homeowner's insurance bill on your own. And look, I know buying a home can feel overwhelming at this point. So if you just have questions or you're ready to get started with a pre-qualification, you can go to winthehouseyoulove.com. Our team works in all 50 states. All of our mortgage advisors that you'll talk to have over 20 years of experience each. So what you can do is click get pre-qualified, or if you just have a question, you can click I have a question first, and we'd be happy to help out.